As the market was falling in early 2020, most people were losing money. Some, however, were making more money than ever before. In this case, Bill Ackman made huge returns, and then after a substantial profit was made, he flipped it back and became bullish. Today, he has suggested that it's time once again to become concerned. Investor complacency is the key word that he discusses, so let's keep that in mind. You came here for the truth, so let me unveil that for you. I'm going to discuss what's going on today in the markets and why Bill Ackman thinks that there is reason to be concerned. After that, I'm going to show you what one insider happened to do at the exact perfect time and how that relates to what we've seen in the news just recently. If I have time, I'm going to get into some economic aspects and, of course, look at some technicals where I can. There's a lot of detail in this one, so let's begin. Bill Ackman's single best trade of all time turned $27 million, all right, into $2.6 billion, and now he's trying it again. If I forget to mention it or I don't have it listed here in the article as we'll follow through, I just want you to note that I believe it's something like 30% of the size of the last trade, so it isn't quite as significant. And you know that if you play poker and so on, if you want to be really convincing, you got to go all in. So this is not necessarily to the same degree as it was several months ago. But he did mention a few things that I do believe are quite integral to everything that we've been noting over the last little while. How all of the indicators have been flashing warning signs and they've been going crazy, and yet you have seen nothing but piling in. But the smart money has made some different choices. If you look at the news articles, if you look at what's happening with certain indicators, they won't tell you that. I mean, look at the stock market itself. Look at the tech stocks. I mean, they're just non-stop going up and up and up. But if you see for what is really there and you clear out all of that nonsense, it starts to make a lot of sense what he's saying. Quote, "We're in a treacherous time." That's some very interesting words that he's using here, and we'll look at some others. Before I show you the article from the Financial Times, I just wanted to go further into this one. The trade, according to the Financial Times, is virtually the same as the $27 billion bet he placed 8 months ago, which earned him a whopping $2.6 billion and was hailed in an op-ed in the New York Times as perhaps, quote, the single best trade of all time. Now you could see right here, S&P 500, a well-timed wager, hedge on right at the peak and hedge off basically right at the bottom. He got it really, really good in terms of the timing. And of course, as a result, the market during this period has done very well. Everything seemed to work out very good for him. But now he's flipping that on once again. So it kind of tells you that if he's onto something from the same situation that was going on 8 months ago, should we be listening this time around? Ackman places new bet against corporate credit. And I just want to make something clear here. When you look at what's going on with the corporate debt, it is so important, and yet you barely see anyone talking about this. I have been harping on about it at least on a regular basis since 2019. I've been talking about the triple B rated debt. I have been talking about corporate debt in general, which has skyrocketed higher and higher, and there has been very little concern. There have been a few notes here and there. I have definitely shown you the charts surrounding it, and we finally have some bets against it, showing you that, as he notes here, the complacency surrounding this is very dangerous. And that's what I wanted to note. Let me show you further into this article. At the start of this week, he put on a new trade hedging his equity exposure with insurance against corporate defaults. Quote, "I hope we lose money on this next hedge. We're in a treacherous time generally, and what's fascinating is the same bet that we put on 8 months ago is available on the same terms as if there had never been a fire and on the probability that the world is going to be fine." And that is such a good quote. So please remember what he is saying here. Don't worry about his trade. Don't worry about what he does and the fact that he's trying to make it seem like, oh, I'm not trying to benefit off of this. Come on, just be honest. This is the way the world works. You're betting on this system. You're doing things legitimately according to the rules. And so this is an opportunity for you, for those who take it. But what's important to note is what he's saying here. We're in a treacherous time generally. And what's fascinating is the same bet that we put on 8 months ago is available on the same terms as if there had never been a fire and on the probability that the world is going to be fine. Those two things are just unbelievable to think about. And what we've gone through this whole year, how crazy 2020 has been. And he's saying here that it's available at the same situation, the same terms. And that to me is so shocking. But it shouldn't surprise us because everything is this topsy-turvy madness that seems to just continue on and on. He said that the new hedge is close to 30% of the size of the bet that he placed in late February when he bought a huge insurance policies linked to $71 billion of corporate debt. So I am definitely very interested to see how this proceeds. Any information further, I'm obviously going to bring it to you at this time. This is what we have, the quotes here himself. He gave us the numbers surrounding it. So we know that this guy is going to make some serious money if this goes his way. But nobody ever really knows. But we can actually see it as it happens with all of these public companies. We will definitely know as this time goes, probably within the next few months. So we'll see. As you know, one of my favorite topics, commercial real estate, as well as the commercial mortgage-backed securities. Check this out. Mounting commercial real estate losses threaten banks and the recovery. Buried in the fine print of Signature Bank's third quarter earnings was a hint of the financial storm that could be about to break over the U.S. economy. I've been highlighting this nonstop, because it is so critical to understand. It's obvious that we've got problems in the retail space, in the office space, and what we are looking at with all of the derivatives that interconnected. I mean, it is quite clear that that's a big issue. How this, goes and finds its way into the other banks and institutions, the insurance companies, and so on, that remains to be seen. That is something that has to happen, and we sort of pick up the pieces as we go along, but we know that the problem lies right here. The Manhattan Bank last month set aside nearly $53 million to cover potential loan losses, largely due to the issue of 2020 and its impact on the U.S. economy. They're saying here basically that lending money to shopkeepers, landlords, and hoteliers in places such as Times Square or Soho used to be considered a sure thing, but now the whole place is a quote ghost town. So that is forcing some of the borrowers to stop making loan payments. And we know what has occurred. You've seen it. The moratoriums are there. Rent's not getting paid. All of the mortgages don't get paid. You have a cascading event that takes place, but the government is sort of trying to bail it all out, trying to paper over it. And we know that that hasn't worked so far, but certainly we will see as time goes on if this can actually unravel the whole deal. At this point, we don't really know. It's not there yet. Now, Signature, which has nearly 60% of its portfolio tied up in commercial real estate, is bracing for the fallout. The bank's bad loan write-offs, though still modest, are creeping higher. Despite years of steady profits, investors have punished the stock, which even after a recent rebound has lost 27% of its value this year. And I just wanted to note, it's not just one bank. We see this all the time. They're highlighting it in this article, but we know, just like last time, think about what happened during the financial crisis. Oh no, everything's fine. It's just subprime. Don't worry, it's just subprime. So we're going to contain that subprime mortgages, all good, and no need to worry. And then all companies all over the world started to think that, this is it, this is going down, this company's going out of business, that company's going out of business, that insurance company suddenly at risk. It was crazy. If you read about what happened, not just, there's a few good movies about it, but you got to read those books because it gives you all the details. You knew how really interconnected all of these were. If US banks absorb big losses on their $2 trillion in commercial real estate loans, the entire US economy will suffer. That's a quote, all right? That's a quote. Just the fear of looming bankruptcies and defaults has prompted banks in recent months to restrict new lending when, of course, they need more lending is what they want anyway, because that would get the economy going. So definitely check this one out. Keep your eyes posted on what's happening with the commercial real estate, the mortgage-backed securities, and how dangerous this really is to the economy as a whole. You may have heard that Pfizer made an announcement. Everything's going to be great, 90% efficiency. Oh, it's so fantastic. Well, isn't this interesting that the CEO of Pfizer sold 60% of his stock for $5.6 million on the day of the announcement? But the firm claims it was all part of a pre-announced trading plan agreed in August. That's right. I posted about this on my blog or community section of the channel. And while most people completely understood what I was talking about, some were saying, no, this is impossible. I had comments regarding the 60% saying that's not true, that it wasn't 60%. And I also noted the fact that some people say that it is completely coincidental. Look, I don't know what's going on, but maybe, just maybe, they waited, they delayed the announcement, particularly for this. I mean, it is the CEO. It's not some sort of director. It's not even one of the other executives. We're talking about the CEO. This guy would know when these are going to be announced and perhaps said, can we release it on this particular day, knowing exactly what happened? Now, I don't know. I don't know what's going on internally in this company. I have no idea. All I can do is present you with this information, and it just seems just really, really coincidental. What do you think? Post it in the comments. I don't just show you this from an article. I think that was the Daily Mail. I actually give you the sources themselves. Number one, looking at the SEC's own website. You can see it here. You can see the trade. You could see exactly what happened. I do not give you the sources as if they're from the news articles or are the source. No, I actually show you the documentation. Now, this happens to be the SEC. That's the official paperwork that goes through. These forms have to be filled out. There are all different types of forms that go through the SEC, and I've shown you many others. If you want to know how to find any of the insider trading that happens, I have a video about it, which I will link to at the end of this video so you can get it there, okay? If you go to that video, it's in my e-course, which is free. You will see how to do that on your own. Don't trust me. Don't trust anybody else. Don't trust CNBC or the Daily Mail. Do it for yourself. This right here gives you a breakdown of exactly what he did in this trade. You can see insider name, Albert Bourla, I believe that's how you pronounce it. And it shows you own minus 62%. So for anybody who was rejecting me on that, it's not the Daily Mail saying it. In fact, the number is even bigger. It is minus 62%. So regardless, information's all there for anybody who chooses to find it out and, do what you wish with it. All I'm saying is that it is highly suspect. It is extremely coincidental, and I want to know what you think. So please, let's all share in the comments. I'm going to end the video there. If you found it informative, please hit that thumbs up button. When you do, you are supporting me, so I want to thank you for that. If you want to learn how to sell stuff online, you can go and click around here and there and get confused with all that information, or you can just get it for free, all documented, everything at the AmazonGPS.com. Do you want to know information regarding the financial system, how it all works, everything from top to bottom, A to Z? Well, I've got it all in these two books explained so easily, and you can check it out right here at the link in the description. If you want the audiobook instead, you can get it at themoneygps.com. Wait a second, don't go anywhere. I told you I would share that video with you. This is the one to see the insider trading. Definitely check it out. Click it, and I'll see you there.